Have you heard that the pirates in Somalia have all come ashore? What's so surprising about that? It's more profitable than fighting. Hey, energy is the foundation of all human activities. Oil dominated the history of the 20th century. And with the global economy moving towards decarbonization and the rising demand for artificial intelligence technology, key minerals that drive the energy transition in the 21st century have become crucial. So how is China performing in this global competition for green minerals? In 2023, my country's exports of the new three products exceeded 1 trillion yuan for the first time, an increase of 30%. My country accounts for more than 60% of global electric vehicle sales, and lithium-ion battery shipments account for nearly 69% of the global total. It controls every link in the solar panel supply chain, and with more than 80% of the market share. It is not an exaggeration to call it the green giant. However, compared with our complete new energy mid- and downstream industrial chain, my country's upstream resources are inherently insufficient. Let's take stock of our assets first. As the world's factory, my country is the world's largest consumer of mineral products, and its consumption of strategic mineral resources accounts for about half of the global total. And the corresponding resource reserves in the country are less than 10%, especially for key minerals related to new energy, which are not abundant. We have a low endowment overall, with a shortage of major metals and an excess of minor metals. There's a serious shortage of nickel, cobalt, lithium, and copper, and we rely heavily on imports. With our new 3 items orders piling up, you can imagine how anxious we are. Alas, who knew that European and American countries are more anxious than us? The Economist in the UK published an article saying that as China's control over global minerals continues to strengthen, Western countries, especially the United States, are becoming increasingly reliant on strategic competitors like us. Out of the 50 key minerals that the U.S. needs, 42 are dependent on imports, and China is the main supplier for 30 of them. With this situation, isn't that going to hinder the return of American manufacturing? Make America great again. Come with me now. Didn't we just say that China is lacking in minerals? Well, even if we don't have them, our friends do. Let's first look at the distribution of key minerals. Most of the world's cobalt comes from Congo. Nic comes from Indonesia. Lithium comes from Australia. And copper comes from Chile. As for rare earths, we have plenty of those. Tesla launched its first electric vehicle in June 2012, marking the entry of new energy vehicles into industrialization. At this time, sharp-eyed Chinese entrepreneurs spotted business opportunities, as 92% of the world's lithium mines are located overseas, with South America and Australia together accounting for 82%. In 2013, Jiang Weiping, the founder of Tianqi Lithium, made a bold bet, using 3 billion yuan to acquire the Greenbushes lithium mine in Australia. This acquisition, a big gulp, marked the beginning of Chinese companies' overseas acquisitions of key metals. China's main investments were in Australia and South America. The U.S. started restricting Chinese investments in key mineral resources, influencing the global acquisition environment through Canada and Australia. They have set varied restrictions on investments and acquisitions by Chinese mining companies concerning key minerals related to new energy. At critical moments, don't forget we have friends. So after 2022, Africa has replaced South America as the most popular destination for Chinese companies looking for mining opportunities, especially the Democratic Republic of the Congo. In 2023, Chinese mining companies' foreign investments reached as high as $16 billion. Africa is an important target. Now, let's experience a mining journey in the Democratic Republic of the Congo together and see what it means to overcome challenges. Hello, the plane has now landed at the airport in the Democratic Republic of the Congo. The staff checked our vaccination certificates and took them away. At this point, you should... Are you trying to get Q coins? We successfully retrieved our little yellow book, but then customs said, your visa has some issues. There's a big problem with your visa. At this point, you might be thinking, you've made it through immigration but haven't picked up your luggage yet. Thoughts? When you find that the valuable items in your luggage have been completely ransacked, you might think, oh, your colleague drives to pick you up and the police knock on the car window asking to see your passport. At this moment, your colleague might... As the Spring Festival nears, let's get to know the Democratic Republic of the Congo, DRC. The DRC is the second largest country in Africa, centrally located, bordered by 9 countries. Although it is landlocked, DRC is a global raw materials hub with Central Africa's gems covering 47% of Africa's forest area. It boasts over 20 types of precious timber and rich water resources. With hydropower potential at 37% of Africa's total. Copper, the king of non-ferrous metals, is 15% of global production, while cobalt exceeds 50% of the world's total, making DRC the top cobalt and second largest copper producer. What's remarkable is that its copper grade is 5 to 10 times that of China's, and the grade of other minerals is 10 to 25 times higher. In places like the KFM mining area, it is over 100 times. What does this concept mean? It means that even after they have processed it 2 to 3 times, the waste material has a higher purity than our best ore. There is more. Wow, look at this configuration. Isn't this the Saudi Arabia of the mining industry? How can European and American companies be so kind to leave this treasure to us? The business environment in the Democratic Republic of the Congo is one of the worst in Africa. Generally, such countries have a common feature. There is no stable and strong government, which leads to poor public infrastructure construction. One of the foundations of industrialization is the power system. The electrification level of the Democratic Republic of the Congo is extremely low, and the power supply can only cover 10% of the population. Power security rate of mining companies. 50-60%. A Chinese mining company head in the Democratic Republic of the Congo reports over 120 outages yearly. If you want to be rich, you must build roads first. After mining, we need to have logistics to transport the minerals. So far, this country has no public transportation system, no subway or highway, let alone a road network. The railway system is also in disrepair and often derails and becomes paralyzed. For developing minerals in Africa beyond development, we must address local infrastructure issues such as water, electricity, roads, and ports. It's not that they have advanced water management. It's one of the best places to build hydropower stations. How can there still be a power shortage? The crux of the problem is corruption. The unequal distribution of resources has led to the fact that the Inga hydropower project has yet to be completed. According to the Corruption Perceptions Index released by Transparency International in 2023, the DRC ranks 162nd out of 184 countries and regions. European and American companies are good at operation and capital operation, but when faced with such infrastructure problems, they are unable to solve them, making them unprofitable. So they began to withdraw. However, Chinese companies have poor competitiveness in many aspects: capital, technology, infrastructure, resources, and labor. From infrastructure to power and office equipment for hospitals and schools, as long as you cooperate with Chinese companies, we can solve all of them for you. Isn't this what we are best at? The main strategy is to trade fencing for mining rights. With our hard-working and adaptable nature, where can't we succeed? The advantage of Chinese mining companies lies in team execution, cost control, and the selection of technology and supporting equipment. We usually operate in a mode where we design, construct, and make adjustments simultaneously. For example, when facing issues with the power system, many companies find they can't rely on local governments, so they convert diesel backup generators into long-term operational equipment. When diesel prices rise, we start repairing old hydropower station units or importing electricity from neighboring countries like Zambia and Congo. In various mining areas, we begin promoting distributed energy projects, with companies like Huawei, China Energy Construction, and China Electric Power Construction entering the scene. Therefore, after the Belt and Road Initiative was proposed, Chinese mining companies quickly rose to prominence and took over the mining industry in the DRC. In the DRC, where Western companies have struggled to develop, we have been the largest investor for 5 consecutive years, with a total investment exceeding $20 billion. The Chinese mining companies you can think of, such as Zijin Mining, Luoyang Molybdenum, and China Non-Ferrous Metal Mining Group, along with a number of other Chinese mining firms, are all participating in this grand gold rush between China and Africa. Among them, Luoyang Molybdenum has become the most important mining company in the DRC by acquiring stakes in the 2 major copper mining rights, TFM and KFM. In 2023, the DRC ranked first in global cobalt production and produced 2.84 million tons of copper, surpassing Peru and becoming the second largest copper producer in the world, just behind Chile. Over 70% of the production comes from our Chinese enterprises, and considering the resource volume in the DRC, this is just the beginning. In the past 2 to 3 years, as copper prices soared, Chinese companies in Africa have made a fortune. At this point, it can be said that venturing into the DRC has been a very wise choice for Chinese mining. The overseas environment is full of uncertainties, such as the risks brought about by changes in government. After Tshisekedi took office as president in 2019, he began to review the mining contracts signed between the country and foreign companies. The expansion project of Luoyang Molybdenum's TFM copper-cobalt mine was once blocked. First, they claimed that the copper reserves were underestimated and demanded a reassessment to increase the royalty. What happened? The difference between the defined copper ore and the copper gold mines in the industry practice. It was 30 times larger, and the price was $7.5 billion. Look, they could have robbed it, and they even signed a contract with you, so we definitely couldn't agree to it. So the government seized the bank account and sued TFM for violating the rights of small shareholders. Then the court appointed a temporary administrator to take over. In July of that year, TFM's products could not be declared normally. At that time, the price of cobalt was at its peak. So let's see how the court responded. First of all, on the one hand, it was necessary to make a big fuss and declare that it would apply for international arbitration. In fact, if it was not carried out, it would put pressure on the Congolese government from international public opinion. Our Chinese companies in the mining field of the Democratic Republic of the Congo would have a very big impact. The government is also afraid of damaging their country's reputation and affecting foreign investment. Secondly, they are uniting all possible forces, from the president's office to the prime minister's office. And the Minister of Justice, they are continuously working with the local communities, emphasizing the pros and cons. TFM is a major taxpayer in the area, contributing 10% of the national tax revenue in the DRC in 2023. The TFM and KFM mining areas have nearly 20,000 employees living around the mines. The restriction on TFM exports has affected 400,000 people, directly triggering panic in the local area. Negotiation is the art of compromise, and in the end, we held our ground and reached a settlement. The total amount involved is $800 million. And this isn't just an issue faced by Luoyang molybdenum. It's not limited to the Democratic Republic of the Congo. For instance, not long ago, the leading non-ferrous metal company, Zijin Mining, experienced a major gold heist in Colombia. Drug trafficking gangs colluded with miners to illegally extract 3.2 tons of gold from the Kati gold mine, worth about $200 million. And what did the government do? They just threw up their hands and laid down. So, if we want to become a world-class mining company, we must have the ability to respond to and resolve these risks. The fact that our Chinese companies dare to take over foreign assets to mine for gold in the Democratic Republic of the Congo is the best proof of this capability. Internationalization is a long march through a rugged path, during which we have to face various changes in political environments overseas. Differences in the legal system, cultural conflicts, and other risks can all ruin the hard-earned results at any time. In particular, a large portion of my country's mining assets are located in economically backward regions such as Latin America and Africa, which not only lag behind in economic development, but are also in turmoil for a long time. In addition, geopolitical conflicts in recent years have led to the rise of resource nationalism. This has posed a huge challenge to the globalization of China's mining industry. Red metals are known as the new oil. These four metals will generate the same income as the oil industry in the next 20 years. At present, Chinese miners control about half of the world's nickel and lithium mines, more than 2 to 5 of cobalt and 1 to 5 of copper. Most of these minerals are mined overseas and are still growing. We have an overwhelming advantage in the processing of key minerals. We supply 60% of the world's battery-grade lithium and 65% of its nickel, 70% of cobalt, and 90% of rare earth elements. There's no doubt that China has become a significant player in the global critical mineral market. The competition for critical minerals is a war we cannot afford to lose when it comes to the future. Currently, China leads the supply of metals and critical minerals used in semiconductor batteries and green technologies, which is a crucial bargaining chip in our strategic games. But ultimately, everything must return to the essence of business. Overseas mergers and acquisitions come with huge financial leverage and utilize a significant amount of our foreign exchange reserves. Any business activity that isn't aimed at making a profit is just playing games with taxpayers.